Welcome, everyone. My name is Mehdi Taileb. I'm your host here on this podcast. And today we have a special guest for a special time, really, because everyone saw the news today and even in the last few days, last few weeks. It can be summarized maybe a little bit by chaos. Our guest will tell us what he thinks of this particular moment in time. So yeah, my guest is an investor who is looked up a lot by a lot of looked up to by a lot of people who really listen to him. He has a great ability to deconstruct reality to go to the fundamental ideas to allow us to invest and know really where value lies in order to not be distracted by all the speculation and manipulation maybe that there's all around us. So my guest is none other than Mr. Rick Rule. Welcome, Rick. Thank you so much for taking the time to do this. How are you today?
I'm fine, and thank you for that very generous introduction. I'll do my best to live up to it.
Oh, I have no doubt that you will. So yeah, let's talk a little bit about you, Rick, for a moment. So if I remember correctly, once I heard you say in an interview that you started in the restaurant business. What it suggests to me is that probably you are a people person, especially since in your activity since then, which is investment, value investment more precisely. You apparently, from what I get. The people component is very important to you because you take a special effort to meet the managers of companies that you may invest into in the future. Is this a fair description of yourself?
I hope so. And I should correct you with regards to the restaurant business. I went into that business because I had no alternative. I was a young immigrant to Canada. I had no money. I had to have a job at night so I could go to school during the day. And I gravitated towards hospitality because there I could work nights for cash and go to school during the day. My story isn't unique to me. Hundreds of millions of immigrants around the world have faced similar circumstances, and they did what they had to do. I need to say that I didn't particularly enjoy that business. I did it out of necessity. And as soon as I was able to leave it, I did. As to being a people person, I think what you learn is that all material wealth in the world is latent wealth until it's transformed into real wealth by a human being. I, as an example, save largely in gold, but I invest in gold mining companies. And it is people that are involved in every activity that translates gold, which is valueless in the earth's crust, into gold, which is valuable in a vault. And so, to the extent that I'm able to understand the human processes involved in adding value, uh, that's a critical part of the securities analysis I do. I wish I were better at it, frankly. Uh, I'm better at the esoteric stuff, which is to say the finance, the technology. I'm less good at the soft part, the people part. But I try hard.
Well, I think you're doing quite well. Everyone will agree, right? So yeah, you are the president and CEO of the Rule Investment Media Company, and you also run. I think it's a separate entity, the Rule Academy, right? So we will talk about those two. Is it a separate entity or not?
They are separate entities. Yes, I
Okay.
mean both of these involve investor education, which is something I've chosen to do later in life after my alleged retirement. Both because I think there's a great commercial opportunity, but I also think there's a human need. My mother and my stepfather were both educators, both very good educators, employed by the state, and as a consequence, substantially underpaid. I thought that the utility around education made it probably the biggest business in the world, and that if I wasn't working for the state, but rather for myself and my customers, that as opposed to being underpaid, I could be adequately paid or even overpaid, which I see as better. Specific to your question, Rule Investment Media exists really as a way to teach fundamental investing around natural resources to a big community, currently 103,000 investors worldwide. The value proposition is that I will, for free, which is a good price, evaluate your natural resource portfolio. If your listeners go to ruleinvestmentmedia.com, list their natural resource stocks, I personally will evaluate it 1 to 10, 1 being best, 10 being worst. I will disclaim that that valuation is a snapshot in time, which is to say something that is a 1 today might not be a 1 tomorrow, depending on news. Um, you understand that. We refined that message at the Rule Classroom. The Rule Classroom is also free, and its facilities are used by 17,000 investors worldwide. There, we have over 300 hours of instructional programming. We have discussion groups, we have lectures, we have Q&A sessions, we have all kinds of things, and it's absolutely free. We do have some services behind the paywall, which means that you need to subscribe to get those services. As an example, anybody can participate in the Q&A in listen-only mode. But if you want to ask questions, you need to be behind the paywall. The paywall is very cheap. It's $20 per month. In addition to that, every 90 days, we sponsor something called a boot camp. Boot camps are 8-hour long online deep dives into one topic or another. We've done silver, we've done uranium, we did a 3-part series on gold investing. We've done area plays like the Golden Triangle. These are very intensive sessions. The idea is that we give you enough basics in 8 hours that you at least know how to know. You become a competent investor and speculator in that. This is not free. It's 99 US dollars. For $99, you get the course, you get access to the recordings of the course for a year, which you'll need, by the way. And there's an absolute money back guarantee. If you think for any reason that you didn't get your $99 worth, we'll give it back. And then finally, our granddaddy product, which is the Natural Resources Investment Symposium, gone on for 30 years. It's held live this year in Boca Raton, Florida. I'm delighted to say we're sold out for the first time in 20 years. It's July 6th through 10. But we have a large online component to that, which means that, as an example for you, if it were inconvenient to come from Tunisia to Florida, you can attend the conference from the comfort and convenience of your own home via live stream. And that once again comes with an ironclad money back guarantee. I believe this conference to be the finest natural resource investment conference for individual investors on the planet. And that gives me the confidence to say, unlike any other investment conference that I know of, if for any reason you're unsatisfied, we'll refund you your money.
Yes, I can absolutely testify that the content on the on both entities, the Rule Investment Media, but also the Rule Academy, is of very high level, and most of it is free, really. And honestly, I'm still absorbing the free part of both. So yeah, I thank you for that, Rick, and I guess it is a testimony of your generosity, because you could very easily sell all of this knowledge for a very high price for a very select few of number of people.
You know, Mehdi, in my youth, I received incalculable benefit for free from mentors. And I feel personally that if I didn't pay this forward, if I didn't impart some of the knowledge I've gained in 50 years uh, before I shed my mortal coil, that I would dishonor the obligation that I have to the people who taught me absolutely for free in my time. And one of my great joys in life now, in addition to the classroom, is the mentoring work that I do through Students for Liberty and other organizations, uh, helping very young people in the same way that I was helped when I was their age.
Yes, it's still very nice of you because not everyone does that. I went to public school. I did all my education in public school, and I'm grateful for that. And it was all free, really, except when I went to France. By the way, I also worked as an immigrant to pay my studies, but I was delivering museum pieces, so it was maybe a little bit more fashionable
You
than
were smarter than I.
yeah, maybe then I don't know, then delivering sandwiches or whatever. So yeah, it's very generous of you, and really, I strongly recommend to people that they visit your website or websites. Are the two entities on the same website? I don't remember.
Two different websites.
Two different websites. Okay, thank
One
you.
is ruleinvestmentmedia.com. The other is ruleclassroom.com.
Right, and there's plenty of videos on YouTube. So why did I want to invite you, Rick? I remind everybody that the first episode of this podcast was in 2021, during the pandemic that we all know, and it was on monetary domination. It was on monetary domination. It was with Professor Ariane Tichit, who teaches at the University of Aix-Marseille. And yeah, we talked about the many aspects of monetary domination, from the central banks and the debasement of currency, and the difference between currency and money, right? It's not the same thing at all. And also I remind everyone that last year I interviewed Phil Lowe, who is a great educator as well, and it was in March last year. Silver was still hovering above $30, if I remember correctly, and so it was really the last few weeks before silver went up. Yeah, hopefully as many people as possible listened to Phil Lowe's recommendations regarding silver and took advantage of it. And your interview today, Rick, is really in the continuation of all of that, because I wish that people really be more educated about these matters, which are really vital to them. Right, and it's a great segue to my next question. Really, do you think that education around investment should be something that we should learn very early on in school? And also, why isn't it the case?
You should learn it very early on, but not in school. Schools are controlled by the state. And the state, knowingly or not, teaches you what's in their interest as opposed to your interest. The state would have you believe that fiat currencies, specifically theirs, are the correct medium of exchange. That is one way that the state steals from productive individuals. So it's important to note that in terms of finance, the interest of your nation state and your interest are different. It is very important that you learn about money. It's important that you learn about economics. It's important that you learn about education. And it's important that you learn that independent of the state. I'm not saying that people shouldn't send their children to state-sponsored schools. In many places, that's the only alternative available. But I think that parents have the obligation to educate their children too in a propaganda-free environment. And I don't think that state schools are the right place to form your values or acquire basic knowledge.
Yeah, absolutely. Absolutely. It makes total sense. And I would go even further than that, because in this podcast, we sometimes talk not only about the monetary domination at the national level, which is the debasement of the currency, but in the case of the US, which is an empire, and its currency is a world reserve currency, not for too long maybe, but it's still the case. So actually, when they print money out of nowhere to put it in their own pocket or in their friends' pockets, it's the whole world which suffers from it, right?
That is correct. I think there was a point in time in the United States when American society assigned some value to the sanctity of our currency. When we came to understand, likely in the Kennedy years, what Charles de Gaulle described as the exorbitant privilege of being the world's reserve currency, the fact that we could at once export our policy preferences while at the same time exporting our sins, I think the temptation to exploit the rest of the world for the benefit of the US political elite became overwhelming. I would suggest to you that in 1975, when we artificially reduced the US interest rate again, that American society, at least our Congress and our president, made the final decision, sacrificing the nation's pride, if that exists, or at least the belief in the sanctity of our obligation to the rest of the world for providing the world's reserve currency. And I think at least some Americans and some people elsewhere came to understand that the rubric had been crossed in 1975. It's worthy to note that I believe that the US dollar will still be the world's reserve currency for the balance of my lifetime. I'm a fairly healthy 73-year-old. I don't think it's because the US dollar is a particularly great instrument. I think it's because it's the least bad instrument. My friend Doug Casey said the US dollar is the worst currency in the world except all of the others. He also described it less charmingly as the prettiest mare at the slaughterhouse. So when people discuss the demise of the US dollar as a world's reserve currency, they need to understand that for all of the US sins, and they are many, that it's the least bad, the most liquid, the most transparent alternative. It's worthy to note that in the very recent circumstance, US v. Iran, if you will, that despite profoundly negative policy implications for the US, that the US dollar rose.
Exactly, exactly. Well, I was going to ask you about that because I was looking at the news this morning. So there's this word which is coming back more and more, which is stagflation, which is like the ultimate horrifying state where an economy could be, let alone the whole world. Yeah. So well, oil went almost up to $120 per barrel, I think, today. You have the U.S. administration, which is opening up the strategic reserve to try to lower the prices, which is a little bit funny because I think they intended to do that a little bit later before the midterms, but now they put themselves in a situation where they are emptying the strategic reserve. There's also stocks that are selling off. The Fed, the U.S. central bank is in a bind because if it lowers rates, it is going to bring inflation much higher, and a lot of people will not be happy. And if it raises rates, the stock market will collapse even further. So, how would you describe this situation? Did you expect it? Did you expect that we would get here? And yeah, how would you describe it really?
I didn't believe that the Russians would be stupid enough to invade Ukraine. I didn't believe that the US would be stupid enough to invade Iran, which will show that as a geopolitical analyst, I should be fired. I'm not one. But let's get back to your question. Um, much is made. This really says a lot about the ignorance that the US has, no, not the US, that the world has about world oil markets. The most commonly cited statistic that you see is that 20% of the world's crude flows through the Straits of Hormuz. That doesn't matter. Over 50% of the world's export crude flows through the Straits of Hormuz. If you take a market, oil, where there was a 3 million barrel a day production surplus, and you reduce the supply by 22 million barrels a day, what do you reckon happens? The only way that you can ration a scarce commodity is by price. The idea that people didn't anticipate this is at best amusing, and it extends beyond oil. It extends to nitrogen, nitrogenous fertilizers, petrochemicals, aluminum, helium. Um, this too will pass. We'll likely get through this. I don't know how, but we'll likely get through it. The policy implications for the U.S. are, were I watching this from Mars or somewhere not on Earth, I would find amusing. This is what the strategic reserve for petroleum exists for. However, I personally, as an investor, wouldn't want my energy future to be managed either by Congress or the president. I would prefer to do that myself for fairly obvious reasons. With regards to interest rates, that's an easy one. Mr. Trump would like a weaker dollar. He would like to lower interest rates. And this gives him the perfect political cover. He can say to American borrowers, I've got your back. I can solve the problem that you will have for the next 3 months at the expense of the sanctity of the dollar for 30 years. Mr. Trump knows 30 years from now he won't be here. So it doesn't matter to him. He cares about what happens during his reign. This is absolutely predictable. And it's convenient for him because it was inevitable. Here's why. Ex-war. Let's leave Iran out of this, okay? Leave Russia out of this. Leave China out of this. Let's even leave Tunisia out of this, okay? Just in terms of the US dollar. At the federal level, we have $39 trillion in debt. $39 trillion. But that isn't the worst part of the problem. We have $120 trillion in net present value of unfunded entitlement problems. You add those two numbers together, you get within striking distance of $160 trillion. That's before state and local debt. That number, the on-balance sheet liabilities grow by $2 trillion a year, and the off-balance sheet liabilities grow by another $2 trillion a year. And that's problematic because the IRS estimates of the net present value of America's wealth is only $167 trillion. That's arithmetically unsustainable. Let's just call it what it is. So the United States has two ways out. We can deal with that problem honestly, the way Argentina did, and we can default. But that's not the American way. We have to dishonestly default. We have to inflate away the net present value of those entitlement obligations and allow our economy to outgrow the nominal value of those obligations, just like we did in the decade of the 1970s. It's worthy to remind your listeners, many of whom don't live in the United States, so they haven't been as familiar with our comical story as they should. In the decade of the 1970s, according to the US government, not some cranky old libertarian, the purchasing power of the US dollar declined by 75% in 10 years, which is to say what cost $1,000 in 1970 cost $4,000 in 1980. In that same period, the price of gold, the constant, increased 26-fold. This isn't Mehdi by way of saying that the gold price will increase 20-fold or 30-fold in the next 10 years. But I believe that if the US dollar loses 75% of its purchasing power, that the nominal price of gold, which is to say gold quoted in US dollars, will reflect that decline. The point of all this, Mehdi, is that I would suggest that to the extent that you can, you be your own central bank. You don't rely on the Tunisian government, and you certainly don't rely on the US government. You rely, and the Taleb family relies, on the Bank of Mehdi. This requires some forethought and some discipline.
Exactly. Well, it's a great transition to my next question because people because of this intentional instilled ignorance in human societies about monetary affairs. So many people think always in terms of their currency, either the national currency or the dollar when it is when it is about international currency, people generally think in terms of dollar, maybe the euro. Would you say that this thinking is a fallacy, is erroneous, because it would be a little bit like someone who is climbing a ladder, but the ladder is falling, is free falling, right? Would it be something like that?
It's both factual and a fallacy in the sense that we all live our lives in our domestic currency. It's important that we all maintain liquidity in whatever currency we spend. Gold is an inefficient medium of exchange. Try taking it to the coffee shop and getting change. It doesn't work. So it's important in your own mind that you understand the circumstance that you're in. For myself, in the year 2000, that involved making a strategic decision to begin to save in gold and maintain liquidity in US dollars. Uh, and that's generated an interesting thought exercise. When I look at the value of the goods and services that I consume today in 2026, measured in gold, things are very cheap. Real estate is cheap. Healthcare's cheap. Energy's cheap. Food is cheap. When I measure those things in US dollars, they're very expensive. That tells me that likely I need to continue to save in gold as a store of value and, frankly, as insurance, while at the same time I maintain liquidity for investment and for my day-to-day needs in dollars. And I think it's important that you do that too. You may need to make your life even more complicated to the extent that you trade outside Tunisia. You may need to maintain current assets in your domestic currency for the way you live. You may need to maintain liquidity in US dollars for any investing and trading that you do outside Tunisia. While at the same time, likely, if you generate enough surplus that you can save for your family's future, you need to do that in gold. Your life becomes even more complex than mine, which is already too complex.
Well, it's exactly what I'm already doing because I've been listening to Mr. Rick Rule and other great investors and educators like Mike Maloney also. By the way, I wish Mike Maloney a swift recovery because he's dealing with some health issues. And yeah, his series about money is has been viewed by millions of people. And yeah, so I've been listening to you guys, and of course that's exactly what I'm doing. I didn't invest in gold. I invested in silver because I wanted the leverage. The final the goal for me is to switch to gold, of course. Silver is more speculative, right? But it has
Correct.
more potential for upside.
I would argue that silver is a more speculative asset class, and true savings for me is probably better denominated in gold. What you will find is that as we progress into a precious metals bull market, which I think we're in, when the momentum established by gold, by the fear buyer, begins to pervade the market, and the generalist investor comes in the space, that market leadership changes from gold to silver. If you're more interested in your upside than you are in eliminating your downside, then you err more towards silver. Because I'm a fairly experienced investor and speculator, there are other speculative asset classes which are more appropriate to my skill set and my psychological makeup than physical silver. You may know that I've sold 80% of my physical silver because the place that it inhabited in my portfolio, uh, because there were more efficient uses of my speculative capital. For other people, that don't have the same knowledge, the same tolerance for volatility that I do, silver is probably a very appropriate speculation.
Yeah, well, I did sell a little bit of my silver when it went above $100 to put it in gold and silver miners, just
Right,
like you did, Rick, because I've been listening to you
right.
here as well. So yeah, talking about that, so a real saving would be in gold, right? Because it's been the
For me,
actual, yeah, the
yep.
actual the actual asset which keeps its value across the centuries and the millennia, we could say, right? Because it's been 5,000 years that it's been like that. There's no reason it will change. Silver is more speculative, but it can also have a monetary value at some points, and maybe this is coming back with the BRICS. I don't know what you think about it. Maybe you can share with us a little bit. Yeah, what do you think? What do you think about yeah, silver and its potential for becoming again a money?
I think that silver's utility as money will continue to deteriorate relative to gold. I do believe, however, with tokenization, with the blockchain, that the very definition of money will change. I believe that we will have trusted depositories for silver, for gold, for the S&P 500, for any alleged store of value, which is commonly acceptable among the community, and that coins will develop so that you'll be able to take a unit of the S&P 500 to Starbucks and buy a cup of coffee. And the merchant will be able to aggregate those coins and redeem them for something that resembles an ETF. And I think that anything valuable that's perceived as valuable through a large enough community that it becomes acceptable as a medium of exchange will become a medium of exchange. The technology to do this exists today. The first political jurisdiction to accept it means it's over for every other political jurisdiction that doesn't accept it. My belief is that the UAE will be the political jurisdiction that begins to accept the tokenized wealth as both a medium of exchange and a store of value. When that happens, to the extent that you would like to speculate in silver, but also use silver as a medium of exchange, you will be able to do that. And that will give you the same advantage now that Bitcoin does, which is to say, you will be able to move wealth out of the country that you live in to another country without the interference of your host government. And you will be able to store that wealth, which is simultaneously a medium of exchange, in the asset classification, be it the S&P 500 or U.S. Treasuries or gold or silver, and you will make the decision, not your host government. And I think that'll happen within 5 years. So to the extent that you prefer silver, well, let me rephrase that. You will be able to use your savings, however you denominate your savings, as a medium of exchange 5 years from now.
Yeah, we'll see. Hopefully so. Well, this is an ideal state that we would reach. However, I think you're referring a little bit to tether gold, this new currency, right? Which is
Not
supposedly
not
backed by,
not
by gold.
not merely by tether.
Okay.
I think that we will see, and let me say, I'm hugely interested in what the tether guys are doing. They're very bright guys. We've got to meet them in the context of a couple of equity investments that they've made. But I think that Tether is just a development. Uh, Tether doesn't have a public balance sheet. So you can't know the financial health of your fiduciary. That isn't sufficient for me. The Tether gold right now is held in a Tether controlled vault in Switzerland, which means that my fiduciary is my verifier. That doesn't work for me personally. I'm going to accept the Tether coin as a dividend because I want to further the ecosystem for gold and silver becoming money. But the LBMA uh, has a protocol in development that will allow for audited delivery receipts for gold held by the LBMA to be the backer of the stablecoin. Uh, when that happens, you will have auditable gold with verifiable um, intermediaries. Uh, Much like at my bank, we accept gold and silver as good collateral at Battle Bank, but we insist that that gold be stored at Brinks because we want verifiable audit procedures, but particularly because we want to know that the vault is solvent, that our gold stays as our gold. And the next step in blockchain denominated savings and medium of exchange will be verifiable, auditable delivery receipts. It may be that competitive pressures will cause Tether to transfer control of their gold to vaults that have third party verification. That may happen. The market may demand that. This part of the market will. But in order for gold to fulfill the real role as simultaneously a medium of exchange and a store of value or any other asset class, the requirement will be verifiable and insurable deposit receipts. And we're not there yet.
Yeah, well, absolutely. It is opening up a new. I mean, it's reducing friction a lot for people who want to get gold, and you don't have to get really like specific ounces or whatever. You can get very small fraction, any sort of fraction
Right.
of gold through that. But yeah, absolutely. I mean, you're the investor. You know all these things, and yeah, you want it to be auditable and solvent and everything. But there's also from another perspective, there's also the privacy aspect of things because as you already know probably, Tether USD, but also Tether Gold, they are both on the Ethereum blockchain, which is not private. So with some analytics, it is possible to know that Mr. Rick Rule sent some of his Tether Gold to that other person. Is it something that annoys you at this stage?
Yes, it does bother me. Now, uh, I suspect that the LBMA product, in order to be acceptable from a regulatory point of view, will also have a backdoor. I'm not sure that within the next 10 years, you will have a medium of exchange that is a store of value that is simultaneously private. It wouldn't surprise me if that evolved, but I think throughout the blockchain right now, in order to have systemic adoption, that you have to have political regulatory access. It would be, I think, extremely possible to have your wallet, if that's the way you choose to characterize it, in a country that had higher degrees of security. Your wallet could be controlled, as an example, by a grantor trust in some place like Dubai, uh, which had more tolerance for privacy and individual liberty, and could, in theory, shelter you, Mehdi, from your government and mine.
Well, actually, I, I had a guest who is Ruben Yap, who is the co-founder of a privacy cryptocurrency which is called Firo on this podcast, and we had a very interesting discussion. The title of the episode was "Citizens Not Suspects," because these privacy cryptocurrency they are accused by governments and banks of being like like helping crime, like promoting crime. I mean, crime didn't wait for privacy cryptocurrencies to thrive, right? So that's why the episode was titled like that. And yeah, so the technology does exist. One example is this project Firo, which is a cryptocurrency which has been around for I think since 2016. So it's been 10 years this year. And what they allow you to do, because what you're saying is important, Rick, and what this cryptocurrency Firo allows you to do is to disclose to certain people the details of certain of your transactions, meaning not anyone can have access to the details of your transactions. You are in control, meaning if the state tells you, oh, what was this transaction that you did on this day, on this hour, you can disclose it to show that it has nothing to do, for example, with criminal activity. So this technology does exist. We will see how things will unfold, but yeah, absolutely, it is a necessary pillar. Otherwise, people will not accept that analytics companies will figure out everything about their spending in I don't know, Tether USD or Tether Gold or whatever. Everyone wants to manage their money with some level of privacy. So getting back, Rick, to the questions around being your own central bank. So you said that we need to be saving in gold because this is what keeps value across times and years and centuries even. But when you invest in gold mining companies, isn't this a way of owning a stake in the actual money printers, right? Because the gold miners are the ones who extract gold from the ground. So is it fair to see gold miners in this way?
No. Um, Gold miners come with operational risk. Um, I believe that savings are really a form of insurance, and they should be as close to riskless as possible. I don't believe, by the way, that one needs to invest in gold. Uh, the one needs to save in gold. In the decade of the 70s, when gold did well, in fact, through a 14-year equities bear market, Warren Buffett generated 25% compound returns by investing in companies that were underpriced that had pricing power. He didn't need gold. Mr. Buffett is substantially smarter than Mr. Rule. So I needed gold. I think it's important that you save, and I think it's important that you determine the asset class that you save in. For me, because I understand gold, because it helps me sleep nights and stay calm, the core of my savings is gold. But I can understand that there might be some other medium, wealth medium, that somebody else would feel comfortable saving in. I just think it's important to save. And I think it's important that you manage risk in your savings.
Yes, right. So
And for
yeah, go
me,
ahead.
that's gold. Gold mining companies, I categorize things in roughly three boxes: the savings or insurance class, the investment class, and the speculative class. I would define investing as an activity that you engage in that generates the probability of an economic rate of return relative to the risk assumed. I would suggest that speculating talks about the possibility as opposed to the probability of a higher rate of return, but one where you're willing to accept more risk. I fit a long-term position in gold in tier one. The nominal value of gold, which is to say the US dollar quoted price of gold or the euro quoted price of gold, will vary. It'll vary a lot. But in my lifetime, gold has maintained its purchasing power, while in my lifetime, the US dollar has lost over 80% of its purchasing power. So I ignore the fluctuations in nominal pricing in favor of the maintenance of purchasing power over decades for saving. Others of your listeners will feel differently, of course.
Yes, absolutely. Once you have established a certain quantity of wealth, of course, you are not so much you're not as greedy, right? Whereas when you start small, you want to go to increase your wealth a little bit faster, but while taking maybe some risks. So, what could you provide as advice to someone who hopefully already has invested in gold, for instance, who has some silver for speculation, and who wants to also put his money or her money in mining stocks. You have the explorers, the developers, the producers. You have royalty companies. You have ETFs as well. Is there a general rule that someone who is really a beginner and who should watch and read the all the education materials on Rule Investment Media and the Rule Classroom? But yeah, so the education is the best investment, that's for sure. But
Correct.
beyond that, is there what can you tell someone who's starting in this manner?
It's a function of how much work they're willing to do. Uh, Speculation is efficacious activity if you're willing to work. By you working, you reduce your risk. Many of you may or may not know, I have graded almost 100,000 portfolios in 35 years. And I have learned that most speculators, by most, I mean well over 80%, make some fairly avoidable mistakes. But the fact that 80% of them make those mistakes suggests that most people will never avoid them. One is that they don't invest anywhere near enough time in their portfolio. I suggest that people who are going to speculate limit themselves to the number of speculations that corresponds with the number of hours per month they're prepared to spend studying their speculations. The vast majority of portfolios that I graded did not do that. The second thing is that most speculators uh, didn't acknowledge the time frames required for the completion of their strategy, which is to say, somebody believes that over 5 years, as an example, an increase in the copper price is inevitable. So they buy a couple of copper miners, uh, thinking about a strategy that would require 5 years for economic completion. And they have trauma holding stock over a long weekend, which is to say they have a 5 year strategy and a 3 month tactic. That doesn't work. The third is that people respond to cyclicality and volatility uh, emotionally as opposed to arithmetically. Price is made, and almost nobody gets this right. Uh, Investment and speculation is the arbitrage between the price of an asset and its value, or the value that you expect it to obtain. If you've done enough work to ascertain that a company's worth $100 a share, and it's selling for 70, and you expect that in 5 years' time it'll be worth $300 a share. Remember now that you're buying this at 70. If the price falls to 50 and nothing has changed with the company other than the price, it got better. Most people haven't done enough work to ascertain its value. The consequence of that is that the information they have is that it fell from 70 to 50, so it's risky. The truth is it's less risky. It's substantially less risky. But maybe one investor in 10 gets this right, which is to say the real key to success is passed on by 90% of the participants in the market. Well, it's tragic. It's a huge competitive advantage to that 1%, that 10%, pardon me.
Absolutely, yeah. If someone makes money, it means someone has to lose money, right? And
No, that's not true. It isn't a zero-sum game. I don't
no,
believe that.
yeah,
No, I don't. I do believe that I don't believe it's a zero-sum game. I believe that the world gets better over time, that the pie gets bigger. But I also believe that the share of the pie accrues to those who play the game correctly, and most people don't. I don't believe that somebody needs to lose in order for you to win. I do believe that if you work harder, more prudently over time, that your proportional share of the pie relative to less deserving people will increase.
Right, yeah, it's a very interesting way of seeing things because yeah, I was focused more on the trade. In a trade,
Yeah,
if you buy something, it means someone has sold it, maybe at
yeah.
a disadvantage for himself and advantage for you.
I hope that the people who bought my silver do well on it. I bought that silver because it was hated when I bought it, and I was speculating that when the hatred dissipated, that the silver price would be higher. It was a speculation that came to be true. And that silver no longer fit in my portfolio. There may have been other people who were less willing to buy hate when I was, that needed the verification of the narrative provided by the price, who would have been psychologically incapable of buying silver at 20. For them, psychologically, it was less risky at 75. I suspect that the nominal price of silver goes up for 10 years. I also suspected that there were better speculative venues for my money at that point in time. So, in that circumstance, my hope is that the trade is a win win. The people who bought it from me do well, and I did well too.
Absolutely. There's also the time horizon dimension. Someone who would want a quick gain, whereas someone has more a longer term view of things,
Right.
right? And unfortunately, a lot of people don't distinguish between price and value. That's why you define yourself as as a value investor, right? You always focus on value. Once you determine the value of something through hard work, like you said, can you tell us a little bit? Yeah, because you travel a lot, you meet a lot of companies. Can you tell us typically what your week looks like, for instance?
It really truly varies. I failed retirement completely. So my week really is a function of the opportunity set at hand. Not too long ago, when you and I met, uh, I came to uh, I came to continental Europe because there was a cluster of conferences that I could go to in Zurich and Frankfurt with sort of one plane flight, and then there was a series of conferences in London. My wife altered my plans. There was 11 days between the European conferences and the London conference. I was going to come home. And she said, no, we're not going to do that. And so we punctuated that with a wonderful visit to Egypt. But I guess my life is really spent responding to incentive, a happy wife being an important incentive. Uh, Mostly, kind of what I like to do is study, however that opportunity affords me. Sometimes I need to travel to do that. Sometimes I'm able to do it via computer at home.
Well, it's very inspiring that you are still learning with all the wealth of knowledge that you already have, and you kindly, very generously share. And there's many of us who thank you for that, because we cannot meet all the people that you meet. So it's very important
Right.
for us yeah, to have you share your insights about this or that company, because yeah, when you do some searches on the internet, you just go so far, but you cannot necessarily meet the CEOs or managers of these companies. You have also another activity which made you fail retirement even further, if I may say, Rick, which is a banking activity, but it's not a normal bank. I mean, we all hate banks for good reasons, but I mean, you created this bank, which is a second project, your second project, because you already created such a bank and then you sold it, if I remember correctly. So
Correct.
this bank is called Battle Bank. It's not. a normal bank in that it doesn't seek to steal from its customers. I don't know how to say it in a different way. Can you tell us a little bit about Battle Bank, the philosophy behind it, and yeah, do you take international customers?
Uh, Last question first. We don't yet accept international customers. It took us 4.5 years to get through the US and Canadian regulatory morass. So, in our last bank, Everbank, ultimately we were able to do business with people in 28 countries. That took us some numbers of years. We would expect that we will be able to do business in the former Commonwealth and in the Eurozone uh, within 2 years. But for right now, it's US and Canada. So, what is the bank? The bank, first of all, is branchless. We don't believe any longer that branches serve a function for computer savvy individuals, and they there's a substantial cost associated with having a branch. By eliminating the branch, we can pay our depositors more and charge our borrowers less, and still have more money left over for ourselves, which is a very good thing. We proved that at Everbank. We grew that bank from zero to 28 billion in assets, from a zero market cap to a $2.75 billion sale in 14 years with branchless banking. We delivered a limited range of products and services to a select customer base very efficiently. And that's what we're doing again. As an example, there's $3 trillion on deposit in the United States that doesn't get paid interest, mostly on checking. This is insane. Taking the risk of lending your money to a bank who relends it and not getting paid interest is insane. It's totally insane. We don't have 15 savings products, most of which are designed to confuse you. We have one high yield deposit products that you can write checks against, wire. We think that the next 10 years will have lots of currency turmoil. So we don't believe that a consumer should be limited to one currency. So we allow people to save in 20 currencies. This is particularly useful to first generation business families in the US. Let's say you did business in Tunisia and the United States. You might need to maintain accounts in euros, in dollars, and conceivably in dirham or Tunisian currency. We would give you the ability to do that rather than do all of your savings in US dollars. The third defining feature is that we consider gold and silver to be foundational assets and foundational collateral. So we will allow people to deposit gold, silver, platinum, or palladium with us at Brinks, and we'll establish a credit line so that you can access the capital that you have tied up in your gold and silver without having to sell your gold and silver. This is useful particularly to us because I've been serving that community for 45 years. Our customer acquisition cost, which is another cost in banking, to access the gold and silver community is nil. It costs many banks $200, $300 per customer in customer acquisition cost. We have 22,000 people on the Battle Bank wait list that have been acquired at no cost other than the wear and tear on my carcass, which is something that I enjoy doing.
Well, it's fascinating. So just to be clear, Rick, people. Well, if you open up if you open your activity in the European Union, I could be your customer because I have an account there already. So just to be clear, uh, people could use Battle Bank as their main bank for all the usual financial services that they already get from their current bank, right?
That is correct, unless you're somebody who requires a branch. Uh, at the branch of the big bank that I bank with now, there's a wonderful woman who runs the bank. She's really, really, really nice. She always serves me tea and cookies. The problem with that is I have tea and cookies at home, and she doesn't know very much about banking. It costs that bank almost 1.5% in costs to maintain that branch network, and we don't have that cost. It's an insurmountable advantage.
Yeah, so actually you are applying the basics of value in investing into delivering value to your customers, right?
Correct. Yeah,
Yeah,
I mean, from the bank's point of view, the durable competitive advantages are we don't do everything. We just do things that a limited customer base needs. We do them well and we do them cheaply. I understand the necessity that some people have of a branch banking network. There are some people who don't have the sophistication to use their computer or their phone as a branch. And at the risk of sounding too arrogant, dumb people need a bank too. They just don't need mine.
absolutely, absolutely. And you're also trying to expand, to create an ecosystem around Battle Bank, if I understand correctly, because you are approaching gold miners
Yes.
and suggesting that they use your services to pay their shareholders dividends in gold, right?
Well, that's another circumstance. We believe that there's a shareholder constituency around the world who believes that mining companies should store their working capital in gold as opposed to in dollars. These companies right now are extremely liquid. They have capital expenditures coming up 3 or 4 years from now that they're saving capital for today. And many of their shareholders believe that they should store that capital in gold and silver. If they need access to cash on a periodic basis, we can establish a credit line against that gold and silver so that they can maintain their liquidity in gold and silver, their capital in gold and silver, while at the same time having an operating line secured by that gold and silver to meet their cash needs. We believe that many, many, many shareholders would favor this approach. And we believe that we can tailor a response that allows the companies to satisfy their shareholder needs while meeting their own liquidity needs.
Well, thank you so much, Rick, for all these insights.
Thank you.
Thank you so much, Rick. You take care.
Thank you. Bye bye.
Bye bye.